What is going on, Alpha Hunters? Hope everybody's having a very tubular Tuesday. All right, let's see what's going on the market today. Yesterday, nice buy up the whole day. Nice little pump there, right there at the end of the day, last 10 minutes. Kind of continued this morning, a little bit of a lower gap, not too crazy, really, at all. But we did push bullish there for the first 30 minutes or so. And then basically kind of been pulling back for the past hour. So had a little bit of a bounce there past 10 minutes, or about 10 minutes ago, 10, 15 minutes ago. So we'll see how things kind of go here over the next hour or so. Qs, a little bit more negative than the SPY. SPY is currently down about 1/4%. Qs are down a little bit over a third. So down a little bit more. IWM had a pretty good day yesterday. A little bit of a gap down, a little bit of a sell off here today. Currently down about 1 1/3% today there on the IWM. DIA is kind of flat. Okay, currently down about 0.15%. RSP is currently down about 1/3%. Kind of flat there the first 30 minutes. A little bit of sell down here over the past hour. Okay. RSP, yeah, a lot of things a little bit extended. Especially with the huge run that we had yesterday. Why are we so bullish yesterday? Good question. Good question. People are just optimistic about, I guess, this week, what the Fed's going to say. Probably looking for hits on first rate cuts, that kind of stuff. DIA, yep. IWM is the only one that looks a little sus. Yeah. And yesterday morning, we were kind of talking about these lows that we had put in back in July, even the beginning of August here. And that's kind of where we got to yesterday by the end of the day. It was right up to those lower wicks that we had back on July 22nd, August 1st. And so we're selling down from that. So could have just been a retest, pretty strong retest into that. And now we maybe roll over for a bit. Yeah, I don't know. It's kind of interesting. Qs have not taken out the wick from July 23rd yet. So we have almost made it back to roughly 75% of that drop off from all time highs to that low that we put in on August 5th. I mean, we got really close. Actually, that is probably like 75%, but it's not, fib 76.4%. Okay. Anyways, I was just curious how far we came back. SPY has gone, I mean, it has gotten pretty far. We actually did take out this little upper wick that we had on July 17th, very briefly. Yeah, we have a little bit of a break there this morning. So, yeah, get that gap down on July 17th, upper wick. We broke that high this morning. That's kind of where we sold off from. For how far we've come back, I mean, I had a hard time believing that the SPY doesn't at least make a new all-time high. Even if we roll over after that, I would imagine we at least make a new all-time high. Qs, and that's going to be so interesting, man, because look how far away the Qs still are. I mean, the Qs are still so far away. SPY, not so much. All right, let me take a look. So we know we're getting some data this week. Really, just a lot of talk. Fed faced with up to 1 million jobs vanishing in revision. What? What is this? What do you mean? U.S. job growth in the year through March was likely far less robust than initially estimated, which risk fueling concerns that the Federal Reserve is falling further behind the bell curve on lower interest rates. Okay, so what data got revised? Goldman Sachs, Wells Fargo, and economists expect the government's preliminary benchmark revision on Wednesday to show payrolls growth in the year through March was at least 600,000 weaker than currently estimated, about 50,000 a month. Okay. While JP Morgan Chase forecasters see a decline of about 360,000, Goldman Sachs indicates it could be as large as 1 million. My gosh. Dude. Hold on. Let me read this. Goldman Sachs, Wells Fargo economists expect the government's preliminary benchmark revisions on Wednesday to show payrolls growth in the year through March was at least 600,000 weaker than currently estimated. About 50,000 a month. Okay. So that's interesting. Jeez, but I mean, the fact that you got J.P. Morgan Chase saying a 360, Goldman Sachs saying 1 million, uh, and Wells Fargo, I believe, saying like roughly 600,000 a weaker. So like all these banks, what all these banks are saying is they are expecting the revision to come in substantially lower than what the number had been reported, which okay. Okay, let me read a little bit more here. There are a number of caveats in the preliminary figure, but a downward revision to employment of more than 501,000 would be the largest in 15 years and suggests the labor market has been cooling for longer and perhaps more so than originally thought. The final numbers are due early next year. My goodness, final numbers are due early next year. Wow. Hold on. Was this for what year was it? I'm trying to make sure this wasn't for like 2023. Because obviously we see 2023 is the latest line down here. So that's what I was. But I guess they're talking 2024. All right. Such figures have also been potential of shaping the tone of Fed Chair Jerome Powell's speech at week's end in Jackson Hole, Wyoming. Investors are trying to gain insight as to when and how much the central bank will start lowering interest rates as inflation and job market cool. I would say that makes sense. But I mean, it's so freaking tough because now it's kind of hard to go back and rethink about what the jobs data was like back in the beginning of the year. Okay. Yeah, kind of hard to go back and think about what it was like 3-4 months ago. Anyways, so okay, VIX up a little bit. Dollar continuing to drop off. Yep, makes sense. Probably get down to this 101.3 line, and if you've been bearish, take it off. Just wait. Gold, nice pop higher. It's sold off. Interesting. Okay. Gold's probably going to be skyrocketing here soon. Yields dropping off. At least the 10-year is. Let's see how the 2-year dropping. 2-year dropping a little bit more than the 10-year. How's the 30? 30 years dropping pretty good too. Okay. So they're all dropping. As far as the 10-2 inversion, it's up a little bit. Not really doing a whole lot. HYG pulling back a little bit. Okay. LQD, nice little gap up. Ooh, hold on. Yes. So we did actually wind up getting above that December high and held it by close yesterday. So more than likely, look like we'll have 2 back-to-back days of closes over that December high. So all yearly highs going on right now for LQD. There you go. TLT continuing to push higher. Yeah, looks pretty good. All right, take a look at sector rotation for the day. Healthcare, staples, utilities outperforming pretty good. You also got communications, materials, discretionaries, financials outperforming. Real estate's kind of in line with the market there. And then you got industrials and tech underperforming. And then look at energies. My goodness. I mean, that's not even a gap down. That is like they've been getting hit. Yeah. I mean, you look at the intraday. I mean, energy's just continuing to get hammered. Okay. So energies on the intraday just continuing to get hammered. In industrials, tech, discretionaries, real estate, all underperforming. Materials, a little bit underperformance there. Outperformers, financials, communications, utilities, staples, and healthcare.